Hey there, Legal Tea listeners. This is your host, Jenny Roselle. Welcome back for another Legal Tea episode today, episode 125. And happy 2024. Here we are, another year has come and gone, and we get the opportunity to start a new, fresh year. By the way, thank you for giving me some grace to take last week off. As you know, there's always a new episode of Legal Tea on Tuesdays, but last week fell the day after Christmas, and like many of your schedules, the month of December is just always crazy, right? Lots of holiday parties. This year we had, a few additional client holiday parties than we normally have. We had, of course, family gatherings. I also celebrated my husband's birthday. I threw him a big surprise birthday party. So time just got away from me, and I was pushed against the wall with recording. So ultimately, I just kind of told myself, you know what? If I did, do a new episode, it would drop the day after Christmas. And hey, who's actually going to be, listening to podcasts the day after Christmas? So let's just take the week off, Jenny. Give me a chance to catch up. So that's exactly what I did. And here I am, ready to rock and roll for today's episode, which is a current trends type of episode. So if you're new here, on these current trends episodes, we dive into something in the current time, or maybe that I've stumbled across on the news or social media that is pertinent to my little estate and elder law world. Well, today's episode is more of the current times, version of this type of episode. Because today we're going to be talking about something that if you are a business owner, if you're going to be a business owner, or maybe you know of a business owner, this episode is going to be super applicable because we are talking about something called the Corporate Transparency Act that is officially started as of today. It was enacted by Congress in 2021, but it did not go into effect until 2024. So here we are. Now, the Corporate Transparency Act is something that applies to owners of a business. So you think businesses are things like LLCs, limited liability companies, corporations, etc. Now, there is a list of types of businesses that the Corporate Transparency Act just does not apply to, that those businesses are exempt from this Corporate Transparency Act. But most on that list are either, one, heavily regulated already, so you think of things or businesses like financial services, banks, etc. Or two, they're businesses that are just, fairly large. Now, to count as a, quote, fairly large business, you have to have more than 20 full-time employees, have gross receipts and sales in excess of $5 million, and are also located in the United States. So if you fit this definition of large, you also do not count, and the Corporate Transparency Act just does not apply to you. Otherwise, if you are not on the short list of exempt organizations, the Corporate Transparency Act most definitely applies to you, and you should not only listen to this episode, but also seek counsel from an accountant and or attorney. Now, before we get into what is the Corporate Transparency Act, all of that sort of stuff, I think it's prudent of me to mention that this is going to apply to a lot of businesses. Like when I think of my own firm's clients, pretty much every single one I can think of, this Corporate Transparency Act is going to apply to. So very, very important thing to pay attention to. So let's start with what is it? What is the Corporate Transparency Act? The purpose of the Corporate Transparency Act is really to create a comprehensive and secure database of who owns business entities, and they're doing it with a goal to prevent the use of shell companies, which are being used for money laundering and other just bad or illegal activities. So as I discussed a second ago, it applies to a lot of businesses, but not all. Here's more of a scoop on that front. So reporting companies which is going to be a term of art that we're going to talk about. So I'm saying reporting companies in quotations, are now required to disclose very specific identification information of its, another term of art, quote, beneficial owners to the U.S. Department of Treasury's Financial Crimes Enforcement Network, otherwise known as FinCEN. So first, what the heck is a so-called reporting company? A reporting company is a corporation, an LLC, or any other business entity, unless your company is considered exempt. So those are the ones I was just talking about like a minute ago. There are 23 types of companies that are exempt. So like banks, financial services, insurance companies, accounting firms, public utility companies, like the large companies I talked about a second ago. So if your company makes the list of 23, you can forget about this episode, my friend. But if you don't, keep listening. So if you qualify as a business that must report to the Financial Crimes Enforcement Network of the U.S. Department of Treasury, then the business must submit a report to them with the following information: the legal name of the company, any DBAs, so DBA is doing business as, what state the business got formed in, the address for the primary place of business, the tax identification number, like an EIN, and information for all beneficial owners. So that's that other term of art I talked about. So now that is that we need to define that, right? So let's get into that. So a beneficial owner is someone who owns not less than 25% of an ownership interest of the company. So I'm going to say that again, not less than 25% of an ownership interest of a company, or who exercises, quote, substantial control over the entity. To fit the last qualifier, these are people like senior officers, so you think like CEOs, presidents, etc., board members, manager of an LLC, etc. So when the business goes to report, they must disclose even more information for these beneficial owners, such as the legal name of the owner, the date of birth of the owner, the address of the owner, an identification number from like a driver's license or a passport. And we also have to submit a scanned image of that driver's license or passport. So when does all this start? So if this is something that is applicable to you, when does this start? It's easier to say right now because now that we're in 2024, it's definitely applicable. Though let's give this more teeth. The law is effective now, effective January 1st, 2024. Though from there, it depends on when the business was created as to when you need to submit information to the U.S. Department of Treasury. So if the business was in existence before January 1st, 2024, the business has the entire calendar year of 2024 to do their initial report. Though, if the business is created after January 1st, 2024, you must submit a report to the U.S. Department of Treasury within 90 days of forming the business. And then, starting in 2025, if businesses are started after January 1st, 2025, they will have only 30 days, so not 90 days anymore, 30 days at that point to submit a report to the U.S. Department of Treasury. So yeah, these are really important dates to know and things to know, right? If you have a business, my friends, super important. And if you have a family member or friend that has a business or recently started a business or even is about to start a business, maybe pass along this episode to them because this is such important information and I fear that not many even know about it. Alrighty, we also should talk about what happens if the business does not comply with the Corporate Transparency Act. And I did an episode a handful of weeks ago on Casey Kasem, and he's the voice of Scooby, I believe. It's Scooby or Shaggy? I think it's Scooby. Anyways, as soon as I say what happens if the business does not comply with the Corporate Transparency Act, my brain just said, ruh-roh. So yeah, if a business willfully provides false or fraudulent information to the U.S. Department of Treasury, or if there is a total failure to submit a report in compliance with these rules, there are some very serious penalties and fines. According to the Financial Crimes Enforcement Network, there could be a fine of up to $500 each day the violation continues, and up to $10,000 and possible 2 years imprisonment. So yeah, these are like really harsh consequences. Now, if I had to guess, they will probably reserve the latter stuff, like the whole imprisonment piece, for people that are willfully providing inaccurate, false information, like straight up fraud, like I can't see them throwing someone in prison for 2 years, someone like a mom and pop shop who just doesn't even know about this change in the law. But this is as new to me as it is to you. So maybe I'm wrong in thinking they're not going to be that harsh and mean. And that's basically the scoop. That's basically the scoop of the Corporate Transparency Act, the what is it, the who it applies to, the when it's applying, etc. And honestly, I should also mention that this is brand spanking new, right? It's just starting this year in 2024. So it is likely and honestly probable that the government continues to figure out how things are going to get implemented. So for example, they somewhat recently raised the number of days reporting, the reporting requirement number of days for businesses that are created in 2024. They raised it from 30 to 90. So remember when I said a second ago that if you create a business in 2024, you'll have 90 days to get in compliance with submitting a report to FinCEN? Well, originally they actually had 30, so they raised it to 90, and I think it was just to kind of give people some grace and some flexibility of just understanding the rules relating to the Corporate Transparency Act. So please, please, please hear me loud and clear. It is possible some tidbits in this episode, some things in this episode may even become outdated as the government embraces this change and learns how to even organize themselves. So if you have a business or know someone that has a business, first, honestly, the purpose of this episode was just really to call your attention to this change in the law. But second, to also encourage you to seek advice from a professional like an attorney or a CPA that is able and willing to assist you with getting in compliance with the Corporate Transparency Act. And I think that's all I'm about to share about the Corporate Transparency Act. I think, it's enough to encourage, anyone that has an existing business or that will be starting a business to make sure that this gets incorporated into your business structure, into how you report. Just get it incorporated into things appropriately. Honestly, this is probably a classic example of, this is why I shout from the rooftops about, maintaining a relationship with the professionals in your life. Like professionals like a state attorney, accountant, financial advisor. And if you don't have those people in your life, at the very least, making sure you are making an intentional time to learn, whether it's through podcasts or magazines or newspapers, whatever your cup of tea. Yes, pun very much intended, like legal tea, right? I say this because can you imagine all the people that have absolutely no idea that this, one, got passed, but two, is now in effect now that we're in 2024? And that's just scary to think about. Alrighty, let's wrap this episode up, shall we? Next week, we're back to the celebrity estate planning type of episode. And during that episode, we are going to dive into what happened estate-wise following the passing of our margarita friend, Jimmy Buffett. As soon as he passed away, I made a mental note to keep an eye out for things estate-wise that has happened following his death, mainly to do an episode on here. I mean, who doesn't know Jimmy Buffett? So I would love to have the honor to talk about his life and what happened estate-wise following his passing. But honestly, I say who doesn't know Jimmy Buffett, but that reminds me, I was at a Christmas recently and I discovered my cousin and his girlfriend had never seen nor even heard of The Sound of Music or Annie. So maybe I'm just to the point in my life where I talk about things that people don't know, like the youngins in my life. I don't know. Anyway, so Jimmy Buffett, if somehow on earth you don't know who he is, please look him up. Please listen to his songs. You'll enjoy them. Alrighty. Talk to you next week, my friends, and stay well.